All right, guys, it is time to stop focusing on FTX.
The whole thing, as I understand it, I think was just one big Ponzi scheme, right?
Yes, it was fun to cover for a little bit, but it doesn't really have any impact on where the markets go anymore. What does matter is figuring out when Bitcoin bottoms, what the crypto market is going to look like in 2023, and probably the most important question of all is what is going to happen to the largest Bitcoin fund in the world, because it looks like it's in serious trouble. The Grayscale Bitcoin Trust holds 633,000 Bitcoins. That's $10 billion. And right now, the fund is trading at a massive discount of 45%. That's like being able to buy Bitcoin at $9,000 and still no one's buying. Now, the problem is it's really hard to figure out what's going to happen. Are they insolvent? Are they going to have to sell the Bitcoin? Is that going to crash the market? And just today on Twitter, the Winklevi twins actually wrote a letter to the company and said they're owed $1 billion. It does not look good, but I know it's an important topic to figure out. So I called up Jeff Dorman. He's the chief investment officer over at Arca, which is a crypto hedge fund, one of the few crypto hedge funds that didn't blow up last year. He breaks it down and explains everything. What's likely to happen, what are their options, how it's going to impact the market, how you can trade around it, and whether or not he thinks the bottom is in. Hope you guys enjoy this one, covering the most important topic for the crypto markets right now. And remember to drop a like and subscribe because there's more episodes on the way covering the biggest topics in crypto that can help you make some money this year. Enjoy. As people start to shift their attention away from what's been happening at FTX, it's very hard to tell what is real right now in crypto versus what people are just writing threads about and are scared shitless of the next fund that's going to get liquidated, the next exchange that's going to collapse. Like, I can't tell what's actually going to collapse versus what people are just scared of. One thing that people are focusing on is Grayscale, which is the largest Bitcoin fund in the world. It looks like there's problems over there. Can you explain what the hell is happening over at Grayscale before we get into how you think this plays out? Like, what is the situation?
Sure. Yeah, but before I get into Grayscale, I want to comment on what you just said. I mean, this has been going on for decades, is that when you make outlandish claims, if they're not right, nobody ever remembers. But if you get one right, you become a hero. I mean, look at Nouriel Roubini. I mean, Nouriel Roubini has called 30 of the last one recessions. But the one that he got right, everyone remembers. He doesn't remember the other 29 that he called that didn't happen. He's made it a complete career out of that, right? And you're seeing that now, right? You're seeing people who, are just pointing fingers at everyone. I think the interesting thing about this is that most of the finger pointing is going after who people think are bad actors, right? So they're going after CZ, or they're going after, the guys behind Tether because they think they're bad actors. But Tether and Binance, the business, are actually really strong businesses. Alternatively, nobody went after the people that everyone loved, right? Your SBFs, your Zach Princes at BlockFi, the guys behind Genesis and all that, and not to mention all the miners, even though those were all fundamentally flawed businesses that, were not sustainable. So it's interesting that the market seems to be looking for the bad actor instead of looking for the bad company, which is the opposite of what you normally do as short sellers in the equity market, is you look for bad business models. So it just shows you the state of where we are right now, which is that, guilty until proven innocent, and everybody wants to be the one who calls, the next short.
Right.
So anyway, that being said, I think maybe most people know this by now, maybe others don't, but Digital Currency Group is the parent company of quite a few successful businesses, right? They own an incubated CoinDesk, they own an incubated Genesis, they own an incubated Grayscale. Grayscale obviously being the most profitable of all of them. When you set up a business like this, where you have these subsidiaries, it's important to understand exactly the nuances behind how those subsidiaries flow back and forth to the parent. Meaning, can revenues and or expenses flow down to the subsidiaries and back up? And we don't know that, right? Very few people have a look at DCG's documents and financials to know this. What we do know, though, is Grayscale by itself is a very profitable business, right? They earn a 2% management fee on the net asset value of their funds, independent of where they trade in the OTC markets. So, there's roughly $20 billion now across Grayscale products, even though the market cap from where it's trading is closer to 10 billion because it's trading at a 50% discount. But that $20 billion is what they're earning fees on, right? So you're looking at $400 million a year in fees. Maybe that's lower now because the market's going lower, but you get the idea. I mean, this is a run rate, basically annuity, just a cash flow machine. It's not necessarily the best investment vehicles. I think investors in Grayscale products would certainly argue that they haven't been great. I mean, since the beginning of 2020, GBTC is down 2%, even though Bitcoin's up 130%. So clearly not exactly operating the way they're supposed to in terms of tracking the underlying, but they're good businesses for Grayscale and ultimately up to the DCG parent. The problem that Grayscale has right now, though, is not really a Grayscale problem. It's a DCG problem. It's that DCG's other subsidiary, Genesis, is basically insolvent. They probably should have already filed for bankruptcy, and the only reason they haven't is simply because their creditors haven't really had any sort of a stick or a real incentive to push them into bankruptcy, but they're certainly in default, right? You've got Gemini being one of the large creditors of roughly $900 million. DCG, is the other creditor, given that they lent money directly to Genesis to try to bail them out of their last problem, back in May and June. And then there's a couple others as well. The rumors are that there's one very large creditor who's kind of a Bitcoin whale. And then DCG itself is also in financial trouble because they have a $350 million loan outstanding in the form of I believe it was an 8% revolving credit facility that they were using to buy back their own stock as well as to buy back Grayscale product assets at a discount. So it's kind of a big mess. And the problem is when you get into the situation where you have all these intercompany loans and you have unclear documentation with regard to how liabilities and assets can flow back and forth, you just don't really know. But ultimately, I think Grayscale, the business, is probably going to be isolated from whatever ultimately happens here with DCG and with Genesis. The question just is, can it stay as an entity owned by DCG? Does it need to be spun out? And I think that's where the wild card here is how do you actually monetize this cash flow stream, even though it's likely to end in 2 or 3 years because, Grayscale has no future once there's an ETF or some other product that's going to put them out of business.
Like you kind of explained it there, but I really want to zero in on it. How does something that's such a cash cow, the largest Bitcoin fund, it's a great business model for them. How did they get into so much trouble? Is it just they loaned out too much money? They leveraged? Like what's the root of the problem here?
Well, again, the root of the problem is not Grayscale itself. Grayscale is, as a business, is fine. I mean, they make this money independent of where the assets trade, independent of anything else. The issue seems to be the way Genesis and DCG and others like BlockFi and Three Arrows were using these Grayscale assets. So, for example, if I put in $1 million into GBTC, I can never get that out. It's locked in there forever. I give $1 million to Grayscale. They give me my $1 million worth of GBTC. And I can trade that GBTC, but I can never redeem it back for my $1 million. That $1 million is there for Grayscale forever. Independent of where GBTC trades on the open market, Grayscale still has that money. So ultimately, if you think about incentives of a business, what would you do if you were Grayscale? Would you be working on maximizing returns for your shareholders, or would you be maximizing the AUM? The answer is obviously the latter, right? The more that you can attract, the more money you make, because it makes no bearing on how these products do. It's not like a hedge fund that's, a 2 in 20 hedge fund where you only make money if there's profitable returns. As I just mentioned, the GBTC and ETH and all these other Grayscale products have had horrific returns, but it doesn't matter. Grayscale themselves still get paid. So the problem area, obviously from a ethical standpoint or from a logical standpoint, that's not great for anybody other than Grayscale. But the real problem is that these guys were incentivized to inflate the assets at Grayscale at any cost, because you could basically take money in and no money could ever go out, right? It's Hotel California. You can check in, but you can't check out. So what ultimately happened, and there's a little bit of conspiracy theory in here, so I don't want to speculate too far, but companies like BlockFi and Three Arrows, they were playing the ARB back when those GBTC products traded at a big premium, where they were buying, they were taking Bitcoin, converting it into GBTC, and then taking that GBTC and ultimately waiting 6 months or 1 year till the lockup was over and selling it on the open market. That alone, while maybe again not necessarily the most fair trade for those on the other side of that trade, again, nothing wrong with that. I think where Genesis and DCG and Grayscale ultimately got in trouble was that Genesis was the one providing the loans to these companies that were then doing the GBTC ARB. So instead of just taking Bitcoin that I own and converting it into GBTC, they were borrowing Bitcoin from Genesis and converting it in. So now all of a sudden you have these, you have a situation where you have a parent company, DCG, who is, funding Genesis, which is then funding third parties like BlockFi and Three Arrows, who are then putting money into another subsidiary, Grayscale. And you get a little bit twisted there, and all of a sudden your businesses become a little bit too intertwined. So I think that's where you have a little bit of a problem area. And then when things get bad, what happens is DCG ultimately bailed out Genesis by providing them with a loan to stave off their own insolvency. And now all of a sudden DCG is wrapped up. It could have been very clean. It could have been clean where it said, okay, Genesis was insolvent. They made some bad loans. We're going to just file bankruptcy for the subsidiary and move on. But because of these intercompany loans, it's not as simple now, right? Because if you file Genesis, you may also have to file DCG, which then ultimately puts Grayscale at risk in terms of having cross default language and or even having investors force a new manager of the trust, right? In the Grayscale documents, it does say in the event of a default, investors do have the ability to force a removal of Grayscale as the administrator of the fund and ultimately, have to find a new fund sponsor. So there's a lot of moving pieces here. We don't know all the facts. That's the problem with a private company, right? You're not privy to the facts. If they do actually file for bankruptcy, then this information will become public. But for now, you just get bits and pieces of the story.
One of the questions that people have to have, I have it myself personally, is Grayscale, which used to always trade at a premium, right? When you would buy that, and I think it traded at a premium because it was one of the only products where for certain groups of people, whether it's family offices or people that have a mandate, it was their way to invest in Bitcoin. That changed, I think, and now that's why it's traded at a discount. Like, why does it trade at such a severe discount now versus before 2020? It was always a ridiculous premium. Like, what changed that?
Well, the premium was the abnormality. It was not the discount. Most investments that are backed by some form of book value or net asset value, but where the assets themselves are not immediately redeemable, most of them do trade at a discount, right? We're seeing it with staked ETH. We're seeing it with Coinbase's version of staked ETH. We're seeing it with things like, Nexus Mutual, the token trading below the assets in the Nexus Mutual pool. There's plenty of DAOs out there where the tokens trade, well below the book value of the assets in the treasury. So a discount is what's normal in these situations. The way to ultimately think about it is think about it if you had like a zero coupon bond, and you had a zero coupon bond that had a 2-year maturity, and it was trading at 80 cents on the dollar. Well, most likely you're going to get par back in 2 years, and you're making a 10% per year, as it goes from 80 to 90 and then 90 to 100, roughly you're making 10% per year. That's effectively what you have to do with something like GBTC is you have to say, okay, like, is there ever going to be a mechanism for this to actually track the underlying assets, right? Is there going to be some sort of a dissolution of the trust or a tender offer or an ETF where they'll be redeemable? If that happens, then eventually that 50% discount would close. So by trading where it is, the market's telling you either that the return required is super high in the 20% per annum type, or the timetable it's going to take to eventually get an ETF conversion or some other liquidated event is so far out in the future, 5, 6, 7 years. So it's not abnormal, like I said, for it to trade at a discount, but for it to trade at this far of a discount, it's either the market is just completely giving up on any ability to ever access the underlying assets, or there's a heavy seller out there that is a little bit less sensitive to price. And that might be what we're seeing, right? We know that Digital Currency Group owns almost 10% of GBTC and ETH. There are rules that prevent them from outright selling, but there could be some affiliate businesses or others who are selling to try to raise capital. You just don't know. You don't know if this is forced selling by somebody who is trying to raise capital, or if this is just, don't forget it's also year end, right? There's plenty of traditional companies out there and hedge funds and family offices who might have GBTC on their books and don't really want it to show up on a year-end audit, and they just want to get out of it ahead of year-end. So there's all kinds of reasons why it's accelerating to the downside. But in my opinion, right now, if you own GBTC or ETH, and full disclosure, Arca does own some of the ETH Grayscale Trust right now, it's a bearish trade, not a bullish trade. You're never going to see it trade at a premium again because of a bull market, right? If all of a sudden Bitcoin and ETH trade way up and there's bullishness in the market again, in my opinion, that discount widens. It doesn't close because people, as you said, don't need to own these Grayscale assets anymore to get exposure to Bitcoin and ETH. There's plenty of other ways to get exposure to these assets now besides Grayscale. So I don't think it trades up in a bullish scenario. But in a bearish scenario, that's where you could actually see this do well, right? One way would be simply, let's say Bitcoin falls to 10,000 and ETH falls to, 500. Well, at a 50% discount, that places Grayscale ETH at 250 and Bitcoin, GBTC at 5,000, right? 50% off. You get to a level where even if you can't monetize it, that's just such a cheap level where people might buy these assets anyway. So you might see that discount close just because you have some downside support. The other way is that, if things get materially worse at, DCG and Genesis, and they do actually have to file for bankruptcy, but once they file for bankruptcy, then their assets are being overseen by a court, not their own board of directors, in which case there's no way that they could be doing any selling. So any overhang driven by them being the sellers would go away if they file for bankruptcy. So again, that's an opportunity where GBTC and ETH would do well in a bearish scenario. And then finally is because DCG owns so much of these assets, they actually would make money if this discount closed, right? Because they own so much of it anyway. There is a potential where Grayscale would eventually, file for Reg M exemption, or there might be enough shareholders who vote to force a dissolution of the trust or a change of control of the fund sponsor, in which case you could actually see some path to a liquidation or redemption of these trust assets. So, we own it not because we're bullish on Grayscale or Bitcoin or ETH. We own it because, quite frankly, we're pretty bearish on the prospects of DCG and Genesis. And I think that's probably the way the market should be thinking about it. Doesn't mean we're bearish on the market. We also own plenty of other digital assets that we're bullish on, but the Grayscale one specifically most likely only do well in a bad situation. And you're seeing it, right? I mean, Bitcoin and ETH have been, I wouldn't say strong, but certainly holding in the last couple of weeks. And the discount is widening. Every time Bitcoin and ETH go higher, the Grayscale assets do not go higher, right? There's no natural buyers of those assets right now. But every time we go lower, the discount actually shrinks a little bit.
That's just such a crazy, that's counterintuitive. Like the discount, for people that aren't familiar with the discount, I think it's about 50% for Bitcoin. So you're already basically buying Bitcoin for 8 or 9K. Like as you look, as someone that isn't too familiar with these products, as you look at that just screams like a buy. And in the past, since we've had a premium, I think people's brains are wired to think that if prices start rising, maybe that discount's going to shrink. Like, do you think 50%, you said if we're bullish, that discount can actually widen? Doesn't it already seem like it's just way too ridiculously wide? Like it seems like a fully broken product. I guess I don't even understand how this thing can exist.
Yeah. I mean, you hit it on the head. It's a fully broken product, right? I mean, it is absolutely not at all tracking the underlying whatsoever. And it's broken, right? The only way it becomes unbroken is if there's some sort of, like I said, full market crash where everything crashes and therefore that spread collapses just because it can't go down as much as everything else can go down. Or if there's some sort of an event where there's like a dissolution, right? But you're right. I mean, it's a broken product. It worked for a while, not necessarily because it wasn't a broken product, but just because there was no other competition and no other ways for traditional people in brokerage accounts to get access. But yeah, I mean, not to be too disparagingly here, but towards another asset manager out there. But yeah, I mean, it is a product that is designed to make Grayscale rich and make everyone else poor. And it's not a product that is well designed without having a redemption feature.
Do you think there's any weight to, I've seen this theory tossed around that Grayscale, this fund, this product is probably the reason that Three Arrows Capital, BlockFi, a lot of these funds that we've seen collapse and a lot of crashes that they've caused in crypto over the past year or two have been caused by Grayscale. Is there any weight to that? Like this product kind of led to the collapse because it was just so shitty?
I mean, you got to be careful about absolving someone because of someone else's failures, right? I mean, there's if you look at all of the bankruptcies this year, including those that are maybe heading in that direction, there's a couple of common names that show up as both debtors and creditors on all of these, right? And that's BlockFi, Three Arrows, the DCG group between Genesis, DCG, and Grayscale, and FTX Alameda, right? I mean, there is no question that these four entities were involved in almost all of the problem childs here in terms of lending and borrowing to the same group of people, largely using these Grayscale products as collateral in a lot of different ways. So in that way, yeah, I mean, you could say that if the Grayscale assets did not exist, some of these problems would not have happened. But again, that doesn't absolve people who went crazy using these products to make terrible decisions from lending and borrowing and collateral. So, I think it is quite circular, though, with regard to those four entities and how they were using these Grayscale assets.
Barry Silbert, who runs the digital currency group, founder, CEO, and obviously then owns Grayscale, he tweeted for the first time in about a month yesterday. And Barry, he's on Twitter a lot. He likes to shitpost. He kind of makes some out pretty big statements, says it's going to be a big week, then we dump, right? He's kind of famous for making some big Twitter statements. And he's gone silent lately as more people get worried about what's going to happen to Grayscale. Yesterday, he tweeted out that if Grayscale's Bitcoin ETF dreams fail, the firm may try a tender offer. Can you explain, like, what are the options now as people are trying to understand the situation with Grayscale? What's the scenarios that could happen, and what do you think is most likely? Like, there's tender offer, there's ETF, there's bankruptcy. Like, what are our options here?
Well, the problem with that letter from both Grayscale as well as the tweet from Barry at DCG is that there's no mechanism to do a tender, right? That was very wishful thinking. If you actually read the docs, it also even said like subject to SEC approval. Grayscale doesn't have $2 billion laying around in cash to go do a tender offer for GBTC. The only way to do that would be to effectively sell the Bitcoin in the trust, use those proceeds to go buy back the GBTC. That's no different than a redemption. And the redemption also needs SEC approval. So, that to me, that was more of a, DCG has a massive hole right now in their balance sheet. That hole gets bigger every day that GBTC and ETH go down because they own so much of it. That was a little bit of a, not necessarily marketing document, but an effort to calm the markets, right? No different than, Bear Stearns and Lehman back 12 years ago saying, everything's fine, we're good, we're healthy. And then of course the stock and bonds fall another 10, 20 points after that. So, it'd be great if what Grayscale was saying was true, that they do care about the actual investors in their funds and they want to, help out by doing a tender offer. But the mechanism to actually get the $2 billion to buy back 20% of the assets doesn't exist currently, and would ultimately need SEC approvals.
Okay, so that's likely not to happen. Do you think this turning into an ETF, is that an actual possibility? Or
yeah, I mean, this goes a little bit beyond where I'm comfortable giving an opinion. I mean, I don't understand the SEC's motives. I don't understand what would cause this. I don't really understand why a futures product was okay and a spot product wasn't. I think, Grayscale again makes 2% per year on these assets, regardless of how they perform. If an ETF conversion happens, Grayscale's basically out of business, right? It's not like they have a strong brand name in the market right now relative to a BlackRock or a State Street who has tons of ETFs. So if an ETF actually happens, there will be multiple applications to run a Bitcoin ETF or an Ethereum ETF. And I don't believe Grayscale wins that race. So it would be pretty disastrous for Grayscale if the ETF actually happens because they'll lose the majority of their assets. So I know they are saying publicly that they are going to, sue the SEC and fight to get an ETF. But from a business standpoint, it's not a good business decision for them. So I don't know how hard they're really fighting. Now, ultimately, it won't be up to them, though, right? I mean, there are others besides Grayscale that are filing for these ETFs. And if an ETF is approved, Grayscale is going to have to also convert into an ETF and or, dissolve the trust at some point. So I think that is one of a short number of catalysts that would ultimately help close this gap.
So for traders that are trying to interpret this and people that are watching the discount, I mean, it's just fascinating. Like, I own a tiny amount of GBTC. I wish I would have never bought it. I don't own enough that I even know how much I own, but I know I own some. It's just like, to me, it's just crazy. It's already at a 50% discount. I was thinking that if the market returns, if the bid comes back, that the discount would shrink. I think you just kind of shot down that that hope. But like, what should traders be looking for if the discount gets worse? That's actually bullish for crypto. I just want to kind of understand that fully.
Yeah, I mean, part of it is you have to understand of who the buyers are, right? I mean, most people and individuals at this point know how to buy Bitcoin or ETH directly, right? They can do it through Coinbase, they can do it through, outside of the U.S., Binance and things like that. If you're if you only run money on traditional brokerage accounts, you used to only be able to buy Grayscale assets, but now there's plenty of these other ETFs, these futures ETFs, where you can get exposure as well. I think it's really more about, the traditional RIAs and financial advisors and hedge funds, at least for the time being, are getting out of crypto. They don't want to touch it. They don't want to be involved, right? I think FTX burned a lot more people than you think. I mean, there were very smart, sophisticated investors who got hoodwinked by SBF and others. Don't want to have any exposure to this space right now. And that won't be forever, right? I mean, we know that there are certain assets that are going to do well, even as the industry around it is not doing well. I mean, you could even look at the second half of this year. I mean, Bitcoin and ETH are basically both up since June of last year. So the assets themselves are performing much better than the infrastructure players around it, as you're seeing these bankruptcies. So people will come back, and when they do, again, there will be, in some ways, limited ways in which they can get exposure. But right now, I think part of the flows that you're seeing specifically in the Grayscale assets is that even if Bitcoin and ETH go up, that shows you that there are crypto native buyers in the market, but it doesn't necessarily mean that your, TradFi buyers are there as well. And those are the ones who traditionally make those investments via, the Grayscale assets. So you got a lot of things going on right now. And again, intuitively, a discount like this seems like it's too high and makes no sense. But, until there's a mechanism to force that conversion, again, you got to do that zero coupon bond math in your head. You're not getting paid any sort of, coupon or interest for owning this. So all you can think about is how long will it take for that convergence to happen, and what's the appropriate return or yield that I should be paid while I wait. So if you think an ETF will happen in 2 years, this is a pretty good investment, right? You're making over 25% per year. If you think that ETF is going to take 10 years, a 50% discount, and now you're talking about less than 5% yield. That's less than short-term treasuries. So, running that kind of bond math in your head is really the only way to think about this.
To wrap this up, Jeff, you wrote a thread about what people are focusing on that matters, and what they shouldn't be focused on. It seems like people still are way too focused on FTX and that whole circus show. I'm kind of putting that behind us, but I think a lot of people are still watching that, maybe for entertainment. Some people are still focused on inflation. You got people looking at Binance, the audits. What do you think matters as we approach the new year in crypto versus what is going to matter less?
Yeah, well, I'm not going to dive into, my 2023 outlook and predictions yet, mostly because I haven't written all of them yet, and I don't want to step on the great ARCA marketing team who will be releasing our outlook in the future. But I will say, in terms of what's happening right now,
yeah,
the FTX show is totally irrelevant, right? I mean, if you're buying FTX claims, then obviously you want to follow the bankruptcy docket and learn about which assets are recovered and which jurisdictions are likely to have different recoveries than others. But it has no absolute bearing on the market itself. In fact, none of the bankruptcies do, right? The reason you typically see a big sell-off before bankruptcies and you typically see a rally after is because companies do everything they can to shore up their liquidity before filing for bankruptcy. And ultimately, if they do file, then they stop selling, right? We saw the same thing in May and June. The market went straight down, from middle of May to end of June. And then once Three Arrows, Celsius, and Voyager actually filed, the market went up for 3 months because there was no more forced selling. And the same thing is true here, right? We sold down pretty hard into the BlockFi and FTX, Alameda, banker, and Babel's Finance, all these other bankruptcies. But once they're all in bankruptcy protection, there's no more forced selling. So I don't think the bankruptcies themselves matter at all, other than whatever the ultimate resolution here for GCG and Genesis is. But I think what does matter is the audit situation matters. Everyone is so focused on Binance and proof of reserves, and I think a lot of people who are witch hunting right now, don't really understand how crypto audits work. The blockchain itself is self-auditing, right? By definition, the blockchain is a public ledger. So physically understanding what you own and what's in a wallet is not hard. What auditors have to do, though, when they come in order to sign off on it, is they have to not only see that you have in the wallets, but they have to you have to show them that you have control of the assets, that you have the private keys. So they will sit over your shoulder and watch you do transactions from one wallet into an exchange and back, and basically see, okay, if you're saying this exchange is yours, prove it to me. Send money in and out. If this wallet is yours, prove it to me. Send money out and in. And that takes a really long time to do, especially if you're a massive company like Binance with omnibus accounts and futures accounts that, by definition have a little bit of leverage in them. So they can't just be one for one liabilities and reserves. So it's sort of, again, like we're unfortunately, or maybe fortunately, I've always been a naturally skeptical person, maybe because I'm a former distressed high yield guy, but a bit of skepticism is always good, right? To kind of thwart some of the things that we've seen this year. But we've maybe gone a little too far now, in the sense that we are in a, guilty until proven innocent environment, but there's really no way to prove your innocence. Because these audits take a long time, and there's not that many auditors in the business right now. So, I think that's definitely weighing on markets right now, independent of whether or not Binance is or isn't, kosher. I think no matter what, that's going to continue to weigh on the market. I think the macro picture is interesting in the sense that inflation clearly doesn't matter anymore. The market is not responding at all to CPI. What they're focusing on now is employment, retail sales, PMI, earnings, all the things that show that we're heading towards a recession. I think that could be really interesting from a decoupling standpoint, right? We saw in 2022 that every asset traded together, bonds, real estate, stocks, crypto is all the same. Because we were all fighting the loss of purchasing power due to not just inflation, but more importantly, the central bank's response to inflation. As that cuts into your purchasing power and into your wealth effect. But as we actually settle into just a low growth or no growth environment, that's where it gets kind of interesting, because rates stop going higher. And now you're looking at, okay, well, how do you value these instruments? Well, for corporate bonds, you're going to have a lot of defaults, right? Higher interest rates means higher refinancing costs, and lower cash flows mean, worse interest coverage. So you're going to see defaults, which is not good for corporate bonds. For equities, you have lower DCF valuations, right? Because the profitability of these companies go down at the same time that your terminal value goes down because of higher interest rates. So not great for equities. But crypto is interesting, right? I mean, outside of Bitcoin, which is its own kind of currency animal, most tokens are really hybrid instruments. They're part financial stock, and they're part loyalty or, membership reward card. Well, if you have Delta Sky Miles or Starbucks points, and Starbucks, profits go down, or Delta's profits go down, that doesn't change the value of your Delta miles or your Starbucks points, right? In some ways, they actually are more valuable, because it means you can enjoy something without having to use cash that you don't have. So I think, when you think about a token in that way, and I've written about this many times over the last couple of years, I think tokens are actually recession proof, because that hybrid utility value goes up even as the financial value goes down. Not to mention, a company like Starbucks has rent to pay, they have employees to pay, they have all these costs that don't go down even when revenues go down. Well, most protocols and crypto native projects don't have physical stores or buildings or inventory costs. So, there you should see a pretty big decoupling in a recession where tokens massively outperform equities. So I think that's really important. And then lastly, I think, we still have to accept the fact that, as much as you might love Tether or USDC or BUSD, or as much as you must love Aave or Compound or Genesis or BlockFi, or, you love Binance or Coinbase or Kraken or whoever, they're all perfect substitutes. There is literally no difference between any of these, exchanges and lenders and stable coins, and pretty much any project in crypto has 5 or 10 perfect substitutes. And if you've ever, taken a microeconomics class and you look at supply and demand curves, when there is perfect substitutes, you have a very inelastic price curve, basically meaning that, there's no change in price whatsoever when there's a change in the quantity, because you can just go elsewhere. That's essentially what's going to happen here. So for everyone who is out there just witch hunting, trying to find the next failure, well, most likely the failures don't really have any market impact anyway. if we saw it when UST went down, everybody just went to USDC and Tether and BUSD. When Celsius and BlockFi went down, everybody just went to Aave and Compound and other places. So I think this when FTX went down, it just went to DYDX and GMX and Binance, right? So I think from a market standpoint, even if there are more skeletons in the closet, it's likely to have little to no real market impact.
What's your take on the bottom being in for crypto? I'm curious if you have a contrarian take there. I think a lot of people expect us to just keep going lower. This thing's going to 10K. There's no reason to be bullish on Bitcoin. What's your thoughts there?
Yeah, I mean, I almost never make price predictions because it's fairly impossible. But I think we are at or close to the bottom for sure. And the reason for that is a couple of things, right? One is, again, you do have to separate the assets from the surrounding players in the asset class. And most of these assets themselves are doing fine to even thriving, regardless of some of the failures around it. Also, it's just a very tiny industry right now, right? I mean, we're talking about an $800 billion asset class right now, where $650 billion of that is Bitcoin, ETH, and stables. There's not a whole lot left, right? I mean, and then you have to think about what causes prices to go down? Well, obviously, for a price to go down, you need to have a seller. Well, what kind of sellers do you have? Well, let's go through them. Okay, the forced selling is largely done because these companies have already filed for bankruptcy. You don't have a lot of shorting anymore because most people shorted through FTX, which is impossible now. And then, it's a lot harder to short when you're afraid of all the lenders, right? You used to go to Genesis and put a bunch of collateral at Genesis and take out a borrow and short it. Well, nobody trusts Genesis anymore and nobody has the collateral to put up to short. So you've got less shorters. You got long only funds. Well, quite frankly, if long only funds haven't sold yet, I can't imagine there's anything new that's going to come out that's going to shake them any further than what we've already seen. You have leverage selling. Well, again, there's very little leverage in the market right now because half the players that provide leverage are gone. You have market makers who push prices up and down. Well, they've been decimated, and most of them had assets on FTX as well. So they're, providing way less liquidity and doing a lot less, which is why volatility has gone down. It's very hard to find the marginal seller right now. It doesn't mean we can't go a little lower, but I think it's pretty clear that we're either at or near a market bottom here.
That's one thing to look forward to for Christmas and for the new year, even if we don't get buying. I also think that we're close to the bottom if the bottom isn't in. Jeff, appreciate you coming on, walking through this as people try to make sense of the mess over at Grayscale. Hopefully this gives people a little bit of context there and they can stop the witch hunt that's been happening in crypto. That's not going to stop. I don't expect that to stop. Jeff, I appreciate you coming on.
Absolutely, man.